For more on the damage in the sector, let's welcome Ken Leon of CFRA. Ken, welcome. Good to have you with us. As you look at the home builders, you've got either a hold or a sell on the lot of them, and that is after they have taken it really on the chin. Why do they seem so moribund and not worth investigating to you?
Great to be here. And our conviction really is because we look at the overall housing markets, 22% of the U.S. economy, and we take a disciplined approach of macro top down and bottom up. And we were seeing lots of red signals back in May and really scratching our heads just 2 weeks ago when we saw mortgage rates below 5%, and yet the economic data continues to be negative. 6% mortgage rates is what the industry, the National Association of Realtors, looked for the end of this year. And Toll Brothers reported this week, and it was the last segment to capitulate, which is above $750,000 for a home, with 44% decline year over year on net order value. So unfortunately for the group, home builders will not be the place to be. They are typically early cyclical groups in the stock market.
So watch them at a later time when we get some clearer indication maybe that the economy, or how the housing economy, I should say, is turning in a different direction. You've got a sell and a strong sell on Rocket Companies, mortgage company, and Zillow.
Again, part of that housing ecosystem. Mortgage refinancing is down 65% year over year. The forecast from the Mortgage Bankers Association is very bearish looking into next year. And you need volume really to drive those businesses. And Zillow is looking really for a core business, exiting the buy and sell homes. So I think it's a failed company. The bright note really, or the fork in the road, is home improvement. 98% of U.S. households don't move, and the wealth effect with higher prices means that they're not going to move to another home, but they're probably going to improve theirs. So we're positive on Home Depot with a buy. And again, everyone's focused on the Fed and inflation with the CPI. 42% of the CPI is housing, and its rents is a big part. So we do like residential REITs, such as Camden Property Trust, Equity Residential. Those are buys. We have a strong buy in Mid-America Apartments, which is the Sun Belt market. So there's ways to play the housing market, but our research team at CFRA is disciplined, particularly watching the macroeconomic. And I think J-Pal set the note of where we're going over the next 12 months for housing.